Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 14th of February. So we saw a pretty lackluster week this week with a lot of the trading instruments that we look at not really doing a lot and staying within the bounds of what we set for last week. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD. And we can see we've seen a pretty flat week in terms of trading. The bottom of the range and the top of the range were both pretty flat. We've got a 62.30 as a bottom, and we've got basically a 62.90 as a top. So really a 60 pip range for an entire week is pretty tight for this particular instrument, especially when, we've seen over the last few weeks how much movement we've been able to get in the space of a couple of days. So what we have found, though, is that the market is actually consolidating in between the two moving averages. We know that there's a reasonable amount of support here as well, but we've got the 20 moving average and the 50 moving average both controlling price. Both price is staying inside those two bands, but probably just as importantly, though, I think we've established a pretty serious base here of support where it is starting to prove itself as a potential momentum shift. We can see the MACD is finally about to cross on the 12 and the 26 moving averages. So we're starting to see a bit of positivity there. That hasn't happened since all the way back up at 67. So a pretty important sign in itself. And the 20 and the 50 are also starting to get closer together now. And with price constricting inside it, you'd think it's only a matter of time before we actually do see the breakout. Probably more biased to the upside. If we see a daily close above that 60, probably I'd be going to 63 sort of 30 area. That would clear all this zone. Then I think we've got some pretty good momentum upside up to 64 in the first instance, and then a very strong level at 65. So it's got a lot of upside in it when we do eventually get this break, but I'd be looking for a break of this level first with a daily close, and then look for the pullbacks to smaller time frames to join in on that trend. If we get a daily close below that 62.50 area, which, if that happens, I would be looking at trades down to that 62 area only. I wouldn't be looking for any lower than that because I think this is a very solid base down here. The preference is definitely on the way up because we are starting to see momentum shift and the lightning bolt is all but forming. All right, over to the US dollar CAD. So this one seen a very similar week in the sense that the action was very, very light up until today. We had a low of 142.70 and a high of 143 sort of 60, which is about a 90-point range, but all of the candles were very conflicted. We had a lot of range candles and doji candles inside that week and late last week, but this particular candle has broken down and gone past that level now that we thought was a safe support zone around that sort of 143. We are currently trading at about 142.40 at the moment. The session hasn't closed yet, but it is starting to look a little bit weak. And now that we have got this final break of this important level, that shows a significant sign of weakness. Opposite to the Aussie, the MACD has actually dropped down below zero now. So as we know, that tells us that the 12 and the 26 have crossed to the downside. So we're starting to see that shorter term momentum start to kick in now. And really the target for me is a pretty straightforward one, and that's 141. Okay, we know that we've got resistance there. It's a role reversal zone we would expect it to be. So I would be looking for lower highs and lower lows on the smaller time frames to join in on this trend to get it down to the 141. That would be my preferred move now. Even if it reverses up and tests the 143 from below, I'd be looking for turnarounds and weakness at that point because this is a significant break of what has been a very key level. It's been a very key level for quite some time, and now we're seeing that break. So as long as the daily actually does close down here, probably more importantly even for the week, I think if the week closes down here, that makes it even more significant, and we'll look for shorting opportunities next week down to that sort of 141 area. The only way I was to look at longs on this one is if it's above the 20 moving average. Now it's got to get itself above the 143.50, and at that point it will convince me that we might have some long opportunities, and then we can look at the 144.50 as a target again. But it's looking weak, lightning bolt in play now, and if we get a daily close below this area, we're looking for a potential move down to the 141. So good trading potentially coming up on the CAD. All right, over to the US dollar yen. And it had a relatively strong week. It's one of the ones that actually did move a little bit this week. It bounced off the level we wanted it to bounce off, which of course was that 151 area. Landed right on it and took straight off it. Hit the 20 and 50 moving average and the roll reversal zone. We know that there's support here from above. So it's going to form a level of resistance around that sort of 154.50. Now that we've got the resistance and 20 and 50 moving averages right there, it's going to be a very interesting watch to see whether it can actually continue. If it breaks past the 20 and 50 moving averages and starts to push up, the next level that we're looking for is 156.40. That would be our next target. It's a pretty strong level there of resistance. We've got it all there, and of course we've got this peak here. That would be our target if we get a daily close above these moving averages. But if it continues to sell off, and it's trading below 152.50, I'd be starting to target that 151 at the area for the short. I'd be playing inside this zone from here down to the level of 151. So they're the two markers that I would put for it. Whichever way the momentum switches to the smaller time frames, that's where I would be trading in that direction on this one. I think it's pretty good trading on the yen because it is the one that's moving and it's behaving itself very, very well from a technical standpoint. So good trading on the yen. Just set those two boundaries at 156 here, 156.50 and 151, and you can trade inside that zone until one of them is broken. So some pretty good trade range inside those two zones. All right, over to the dollar index. Another one that was subdued for the week, but looking like it wants to break down now. You can see that we've got a 107.40. Obviously, we need a break below 107 before we start to take this really seriously on the short. It's starting to look a little bit weak, though. There's no question about that. We've had a week of consolidation, and that consolidation is looking like it's starting to teeter on the edge of collapse. You can see we're trying to close here at around that sort of 107.40, but we've still got a couple of hours to go for the session, of course. So we want to be mindful. A lot can happen in the last few hours. But if the daily closes, anywhere in the vicinity of sort of 107 or lower, it's going to really give us a bias to the short. And 1.6 is the level that we'd be aiming for on this one. Of course, the euro is the one we would be trading. We'll look at that in a moment. But as you can see, pretty weak candle and on the verge of collapsing past this support. So one to watch very, very carefully on the dollar index. The euro is the one that we would be trading, and you can see it's quite powerful. This move has been a relatively powerful one for the week. It's running right into resistance. We know that the 104 sort of 40 to 104 to 105 area, sorry, is a very, very strong level. Okay, so here we can see all the support that we've got through there, resistance through there, and more resistance through there. So the 104.50 area is a block. If we can get past that with a daily candle, the next level we're looking for is that 105.50. It's 100 points pretty much straight above that. And then there's a lot of blue sky. So if we can get past there, there's big opportunities on the euro, especially if the dollar really starts to sell off. So I think what we need to do is we're still playing inside a very tight range of the 20 moving average, which is 103, around 80-ish area, and the 104.50. If we get a break between outside those zones with daily candle, then we start to look for trades straight up to the 105.50, which is 100 points from the break. Or if it fails to make this high and starts to roll over and we start to see a series of lower highs and lower lows, I'd be aiming back down to the 20 moving average, which is at the moment around that 103.80 level. Good trading on the euro, and we look like we're about to get a breakout, especially if it's trading above the 104.50 on a Monday. That would be quite impressive. I think that might set the trend for the week, and it might see us push up a little bit higher. So pretty good trading on the euro. All right, and the S&P 500, look, it's been a very, very lackluster week. It's tried to sell off several times and failed every time. The 20 moving average has pulled it up each time. We've gone through earnings. We've survived all the news. We've survived CPI. We've done basically everything that has been required for something to stay strong, and strong it has stayed above the 20 moving average, recovered every time it tried to sell off, as you can see right through here. And desperately wanting to push up to a new high. You can see that. So currently trading at only 17 points below the high anyway. So it's not like we're even that far away from it. Just be mindful though that the high is there and it might find resistance. If it does, generally speaking, I would normally just sit and watch these. I'd like to see it break the 6100 and then test it from above. So get back up there, then come back and test that level from above to give us an opportunity to go long. That's generally the preferred trade. But if you want to absolutely scalp it and you want to go small time frames, look for moves up to that 61.10 to 61.20 area, and maybe that's your scalp. But I think there's good opportunity coming up here, especially if we get a close, an all-time high close by the end of the week. It should set a pretty good tone for next week. If for some reason it starts to roll over here, be mindful that the 20 moving average at around that 60.30 has pulled it up every time over several days here. So be really careful about that, because it's a very strong level and it's a market that looks like it wants to go up. So probably not one I'd be interested in the counter trend on. So I hope you've had a great week's trading. We've seen a lot of consolidation, but the euro has moved a bit for us. So hopefully you're able to get a bit of that. I think we're going to start to see some established trends start next week, because I think we're at very key zones on a lot of these instruments that we're looking at. So looking forward to seeing what the end of the week gives us, and hopefully we start to see some established trends start up early next week. Thanks everyone for joining me, and have a great weekend.